Based on the economic news that came out over the past few days, is the crash in home prices that they've been predicting for years now actually getting closer to happen? Now, they say that the only thing certain is uncertainty, and that's exactly what we're seeing in the Frisco housing market right now. So if we look just the past week, the Fed announced that they were going to be holding the benchmark interest rate steady, but also gave indications that a strong case was being made for a rate cut in September. Fast forward one day, and the jobs report comes out, which was much weaker than expected. The stock market reacted negatively, and investors fled stocks to the safety of bonds, which was actually good news for mortgage rates as they have fallen to the lowest level in the past 8 months. And now here we are this week, the recession bells are being rung as the Wall Street sell-off continues. So what exactly does all of this mean for the housing market, particularly with regard to the future of home prices here in Frisco and the immediate surrounding areas? So stick around because that's exactly what I'm going to share with you in this video. Hi, this is Andrew with the Andrew Smith team, eXp Realty here in Frisco, Texas. And although a decline in mortgage rates has been expected and forecast, nobody expected them to fall as much as they have in just a few days. To demonstrate the impact falling mortgage rates have on affordability, take a look at this slide. Now, using a $500,000 loan as an example, the monthly principal and interest payment is $375 lower now than it was back on just April 25th, and rates are expected to decline further, which is great news for home buyers who have been frozen out by both high prices and high mortgage rates. So now we've got weak economic data coupled with falling mortgage rates. So how exactly is that likely to impact home prices in Frisco going forward? And it's important to remember that home prices are ultimately determined by the relationship between supply and demand. So mortgage rates, the economy, consumer sentiment, all of those things don't directly impact home prices, but they do influence one or the other side of the equation. So as an example, high mortgage rates over the past couple of years have certainly caused home prices to become less affordable. As a result, demand has fallen. So why haven't home prices followed suit? Why haven't home prices fallen? Because supply fell as well. That wasn't exactly expected. So demand fell, but supply fell. So even though you had lower demand, you also had lower supply, which actually acted as a floor for home prices. So let me share my screen. I want to show you a couple of graphs here to help put some perspective into all of this, and also share with you a couple of the leading indicators that kind of give us an idea on where local home prices are heading. So this first screen that we're looking at here is inventory, which is technically just supply. It's the supply of homes for sale. And as we've been saying, I mean, it's been reported all over the news, inventory is going up, inventory is going up. And yes, it is, and it has been. This is current. If we look at this, you can definitely see that inventory is in fact going up, but some perspective is needed. This is going back to August of 2019. So we had 867 homes in a given week. And as of right now, we've got 647, 668. So inventory is up, but it's still not up compared to historical sense. That is the reason why you are not seeing or have not seen home prices fall in any meaningful manner, because the inventory supply just hasn't been high enough. Now, one thing I can tell you, which doesn't show up on this chart, is even though inventory is still trending up, I can tell you that the number of new listings coming to the market each and every week has turned. It's turned for the year. It has flattened out and it is starting to go down. So while we are likely to still see inventory growth based on the fact that not as many homes are selling, not as much supply is coming onto the market right now either, which again is putting a cap on the amount of supply that we have and therefore holding up home prices. And I expect that we will see this amount of inventory start to turn and head down as buyers come back into the market in response to these falling mortgage rates. So next, that's one of the items I look at very, very carefully. And if you'd like to see this report yourself, I've got a link to it in the description below. If you don't want to see the Frisco information, you'd rather see Prosper or McKinney or Little Elm or somewhere else, all of that is there as well. You can actually search for that from this report. All right, so next, we're going to look at the median list price. So this has been zoomed in. And so you're saying, Andrew, why are you looking at list prices? Well, list prices are a leading indicator. The sold prices that CoreLogic and the media keep reporting about that are going up, they're not going up anymore. That is old news. So, you think a home goes onto the market, it lasts for 30, 45 days before going under contract, another 30 or 45 days before it actually sells, another 30 days for the information to be aggregated and compiled, and then they report. So they're reporting on data that's 4 months ago. That's not current. This right here is showing the trend line. Now, each and every year, it is normal in our local market for prices to go up in the beginning of the year. They trend up, and then we hit a plateau right around June, and then prices tend to decrease in the second half of the year. That doesn't mean they're falling. That's just the seasonal curve. It'll go down, then it'll swing back up again. But this dashed line is the 7-day moving average, and this solid line is the 90 days. So the 90 days is a little bit easier to show the curve. But if we look at that 7-day, you can see for the last couple of weeks, it has flattened out. Keep that in mind. When people list their home for sale, they're looking at the most recent data. If they're working with an agent, they're looking at the most recent data and they want to price their home in an area where they think, or at a price range that they believe is going to sell. So if you see that the median list price is holding steady, and then you're going to see on the next graph that we show with regards to price reductions, if you see those are holding steady and going down, it's a good indication that pricing is stable. The fact that we're seeing this turn flat right now and it's holding steady is a sign of price stability here in the months ahead. Then lastly, here's the other one that I like to look at. Properties with a price decrease. Now you can see this is going up. As of right now, it's 56.89%. So almost 57% of the homes on the market right now are taking a price cut before they're going under contract. But last week it was 58%. Before that it was at 55. So it's kind of gone up, it's peaked, and it's turning down. Median prices are holding flat, and the number of homes taking a price cut is starting to decline. If I reset this zoom just for a minute, you can see that the numbers we have here are not unprecedented by any means. Back here in November of 22, when interest rates were really moving up, 64% price cuts. But even when you go all the way back, into 2020, you still had 44% price cuts. So we're in a range. It's a little higher than normal due to the weakness in the market, but it's not unprecedented, and it is starting to trend down. So once again, price cuts are trending down. Median list price is holding steady. Those two things combined together are a really strong indication that pricing is going to stay relatively stable and flat here in Frisco over the next few months. Now, I hope this information I've shared helps provide you with a little bit of perspective. But it is important to point out that ultimately all real estate is local. So what happens here in the DFW market might not be the same as what happens in San Francisco or Miami, for instance. Now, our local economy remains really strong. We've got strong job growth. The prospects for the future are really strong as well. And we're continuing to see plenty of inbound migration. And I'll be honest, I personally haven't seen any report that gives any sort of suggestion that our market is going to turn negative in the next 5 years. That doesn't mean it can't happen or it won't happen, but there's nothing to suggest it at this time when I look at all of the reports in aggregate. So I'm going to leave you today with this quote from Bankrate, as it kind of sums up things here. And, if you're planning on buying or selling right now, you've got a decision to make. What do you do? Do you wait for rates to fall further? Do you wait for buyers to come back? Do you go ahead and make a move now? So what is it? Here's what Bankrate had to say. If you're ready to buy, now might be the time to strike. Home prices have been rising primarily because of a long-standing shortage of homes for sale. That's unlikely to change, and if mortgage rates do fall below 6%, it's possible buyers would enter the market en masse, further pushing up prices and resurrecting bidding wars. Now, I'll be honest with you. I'm not expecting bidding wars anytime soon based upon what I see here. Also, compared to many other markets, we have a tremendous amount of new construction, which helps our supply stay a little bit higher than it does in many areas of the country. But what I can tell you is this, everything else aside, if we go back and look at the past 11 presidential elections, both total number of home sales and prices have gone up in the year following the election 9 times. So in 9 out of 11 cases, prices and sales have gone up following the election. Just something to think about. So thanks for watching today, and make sure you don't go anywhere, as I know you're going to enjoy one of these videos coming up next.